What's up, guys? Welcome back to the YouTube channel. So in today's video podcast, I sit down with Tim Woodbridge of Woodbridge Capital. He is a commercial real estate investor, specializes in mobile home parks in the southeast sector of the United States. What makes Tim Woodbridge's story interesting, though, is that he got started in real estate with no prior experience and was working as a full-time healthcare worker, and then eventually transitioned into becoming a full-time real estate investor, and now has a proper syndication buying mobile home parks nationwide. In this podcast, we actually sit down at the MHI convention that was in Las Vegas earlier this year, and we talk about everything from how he raised money for his first deal, how he found his first deal, how he found multiple different mobile home parks after that, how he structured his partnerships, raised his money for it, some pitfalls and mistakes he made as far as like infill assumptions and operations, and how he knows how to operate parks now and is scaling up to the next level, buying larger and larger parks. For example, at the time of this recording, I believe he has a little over 100 sites closing around the Greenville, South Carolina, Spartanburg, South Carolina market. And then I just saw on Instagram this morning, he posted having over 100 sites under contract in Alabama right now. Hope you guys enjoy this podcast. If you're a commercial real estate investor looking to get into mobile home parks, or you're an active operator, you might take a lot of good insights from this. Tim's a really cool guy. I really enjoyed sitting down with him. Before this podcast starts, so don't forget, all of these episodes and this YouTube channel is brought to you by MHPvalue.com. That's my commercial real estate brokerage team. We specialize in maximizing value for mobile home park owners. If you guys would like a 100% free evaluation on the exact value of your mobile home park and a free game plan on how to sell it and maximize the value of your park on a sale, head over there. Then also, I do have a coaching program called CREDealAccelerator.com, which teaches real estate investors like you how to source off-market direct-to-seller opportunities in pretty much any asset class. So without further ado, hope you guys enjoy this video. Glad to be back. It's been a while since I posted. In today's video podcast, we have an impromptu set here live at MHI. We actually have a lot of people that are probably going to be watching as we get going, but I have Tim Woodbridge, who is a commercial real estate investor in the Southeast. How many units are you up to now? And then I know you have under contract a big portfolio too.
So let's see, I am 273 mobile home pads, 34 unit apartment building, 27 pad RV park.
Yeah.
And then under contract, 118 in Alabama and 100 in South Carolina.
Nice, nice. And for those of you listening, so I guess a good thing about Tim's story that people can learn from is that he transitioned from kind of the 9-to-5 lifestyle into becoming a full-time real estate investor. And unlike a lot of guys who start with small deals or tiny deals, like, you went right into big multi-unit communities and things like that. So to get the podcast started, can you tell me about like personal questions first? Where'd you grow up? What was your background? And what were you doing for work before getting into real estate?
Sure. So I'm a Californian.
Okay.
I didn't know anything about real estate.
Yeah.
I got a bachelor's of science in nursing.
Yeah.
I was a nurse for a long time.
Okay.
I moved to South Carolina from California to Arizona to South Carolina.
Yeah.
Again, didn't know anything about real estate. Happened upon Rich Dad Poor Dad, and it was like, oh, this is how people do it. And from there, just did a deep dive, listened to podcasts, read books.
Yeah.
Heard Frank Rolfe on the Bigger Pockets podcast, and
Cool.
I was like, oh, that's what I want to go into.
Yeah.
And so, I just, it could have been other things. It could have been single family. It could have been whatever. But, I was just, mobile home parks, it, excited me.
Yeah.
So
how'd you first find out about it? Was it did you do the whole boot camp thing too? Or?
No,
Okay.
no.
Cool.
So it was just a podcast. And Frank was like, he gave the basics of it. And so I did a little research how to, do a very basic valuation.
Yeah.
And he said, go check out mobilehomeparkstore.com.
Yeah.
His partner Dave's website.
Yeah.
And I found one an hour 15 from where I was living.
Cool.
And it was on market for a while. And I just reached out and nervous as hell, but about everything,
Yeah.
But just took the baby steps and talked to the guy. Saw the park, made a lower offer considering it was only 10 to 36 occupied at 125, I think, a month.
Okay. Yeah, so it was a low occupancy, occupancy, low rent deal.
Yeah. So he wanted one price. I gave him the Frank Rolfe price, right? So it was to the best of my knowledge, this is how much I can get the bank to value it at. I'm not trying to lowball, but to the best of my knowledge, this is what it seems like it's worth. And he said, I can't go that low. I can't go anything lower than this, right?
Yeah.
So it was listed for $395. I made an offer like $114.
Yeah.
And he said, I can't go lower than $250.
Okay.
And I said, okay. If I do $250, can we do that? And he said, yeah. And I said, will you finance the whole thing?
Yeah.
Because again, like, I'm going in like blind, but like, you know, what I don't know helped. So he said, no. So I'll finance 50 of it. And I said, okay. I didn't even have a second contract that had like anything, like any blank spots.
Yeah.
So I left, there was nothing signed. It was just, I hope that this guy is like agreeable. Like I hope he sticks to his word, and he did. He did. So you know.
So how did you? So like backtracking to like the beginning stages, you're researching about the mobile home park industry, how to value them, things like that. And like you were mentioning, you really didn't know what you're doing, but you're like, if I could buy something really cheap with a lot of upside, you'll probably figure it out.
Yeah.
How did you put together the money for the very first deal? Because a lot of people struggle with getting the first deal done. And then obviously once you have a track record, and now I know you're raising money, buying much larger deals, and you're well established. But in the beginning, like, what did that look like as far as, how did you even learn? Well, it sounds like you didn't know how contracts work, but you're like, we're going to figure it out anyway.
Yeah. That's how I
like,
do.
Where'd the capital come from for it? Did you have to get bank financing or seller financing? You're saying he did it in second position, so you did get bank financing.
Yeah.
So like, how'd that look? Did you need someone to co-sign on the loan? Like, what's kind of the whole gambit? So how'd you get the capital, first of all?
So the capital, so we needed $25,000, and I didn't have that because I was a nurse who only knew how to spend money and not save it.
Yeah.
You know, my dad saved everything, my mom spent everything. I took after my mom.
Yeah.
And so like, but anyway, so a friend from a local real estate meetup, you know? So the reason I said, can you finance the whole thing, was because I was going consistently to Tuesday meetings. Because, you know, I worked as a nurse Friday, Saturday, Sunday, every week. So I always had Tuesdays available. And so like, it was just a bunch of old Southern guys who were like didn't like banks. They preferred creative. So that's why, you know, the first thing I said, will you finance the whole thing? And he said, I'll finance 50 of it. So, you know, we talked to a lot of banks. They said no. And then eventually one bank said yes. And it was, a friend of the seller who was a local vice president of a local bank. And so he said, we'll give you 70%. So 175.
So the process, how'd you first find the deal too, just out of curiosity?
On mobilehomeparkstore.com.
Okay, so just something that was online. All right, so you found it.
Nothing crazy.
Underwrote it to the best of your ability at the time. And then as far as like reaching out to banks, because I know a lot of people struggle with that too. Like, it was simple as like, let's just start calling the VPs of every bank surrounding the property, I assume, right?
I heard, 19 no's for my one yes. So that's, and I mean, shoot, if I'm not going like with a loan broker today, if it's smaller, I still
just get on
call
the
the
phones,
banks
call
and hear
local
19
banks.
no's for one yes. So,
Cool.
But yeah, so anyway, the lender said, I'll give you 70%, I'll give you 175 grand. The seller carried 50 in second position, a 5% IO. And then, so we needed 25,000 and then closing costs. So a guy who I knew from a local real estate meetup, the same one where I was hanging out with all those old Southern guys. He wanted in on the deal.
Cool.
So, brought him on and closed it. I paid, closing costs. He paid the 25. And then
so with that, what did you say the occupancy was?
10 and 36.
Okay, and then at 125 lot rent. So were there park-owned homes in place already to rehab? Okay, so it was an infill, but the first thing you probably did was try and get rents closer to market because that's the easiest kind of upside, or?
No, kinda. So I closed it and I was like, I have no idea what to do. I know I have to fill these vacant pads. I knew that I could go push it to 175 like pretty quick. I think I did that within the first 3 to 6 months. I went from 125 to 175. I knew that because, so the seller's brother has another park in town. And so I was just, calling around local parks. What are you guys charging? What can I do? Okay, y'all are charging this? Well, my lots are a quarter acre each. So like I could probably push it a little bit more, not crazy, but a little bit. So pushed it a little bit with the rents. And then, so COVID happens in
Yeah.
2020, and Legacy says, hey, we'll finance 100% of these homes to park owners.
Oh, that's
You just have to pay for a setup.
Yeah.
And I was like, yeah. I was like, let's do it. I don't know exactly how to do anything, but like I know we got to get these homes in and we got to set them up.
Yeah. But even by accident, you're doing it the right way, bringing in brand new homes to really making the community a good looking park versus bringing in a bunch of shitbox 1980s homes you could find.
Yeah. Don't get me started about
used homes,
and fucking mobile home wholesalers.
Yeah.
There's some good ones. There's some good ones, but come on now. Come on, let's talk.
When you're buying a shitty 1980s home for 25 grand, it's like, and then it falls apart as soon as it's there, and you spend another 15 to rehab it. It's like, should have just bought new.
Why did I do that again?
Yeah.
Oh, okay. That's because I needed to learn. I need to spend some money to learn. That's why.
Yeah. So with that in COVID, like you're ordering the new homes from Legacy. Like, how many were you able to get delivered? Like, how was that process?
It was
good. And I'm genuinely asking for my own understanding.
Yeah.
I know we talk a lot offline, and like, I know to underwrite operations, sort of, just from what buyer groups tell me, but I don't really understand, like, well, how many homes can you get delivered realistically? How quickly can you infill? And I know that's
so
expertise.
it's different now than it was then, like, because, COVID hit, and, like, they were just trying to keep their doors open. Yeah. They had those, like, 7 homes to me within, like, a month.
Yeah, because it was, they're like, we got to move.
Yeah, they're like, we got to do stuff, or else we're going to, I mean.
That's perfect.
Exactly.
For a new operator to get 7 brand new homes in 1 month, that's like.
Yeah.
Perfect.
And they finance all of them, right? 100%. So, like, the difficult part was me figuring out, okay, how do we set them up? So one of the guy who leads the RIA, one of the old Southern guys, right? He like specializes in mobile homes, and so he's perfect. Like, he used my setup guy, and so he came in and he set it up, and I was like, man, I have no idea how I'm going to pay for this. I have an idea, and a lot of shit was put on my personal credit cards. A lot of shit was, was a lot of sleepless nights.
Yeah, but, whatever gets the info. I mean, it's whatever gets it done.
But I did a lease with an option on all the homes, so I got like $5-ish grand, like 4 to I think someone brought 15 grand. To be honest, for an option. So like all that money I brought in, I paid off, everything, and paid my like personal credit cards off, right? So, man. I mean, I didn't know how I was going to do it, but I did it. Yeah. So.
Now the guy who funded the deal, which was minimal money, it sounds like, but what was the structure with him? Was it kind of just like a hard money thing, like you'll pay him like?
So he's a partner. It used to be 3 people. Yeah. And then the third guy screwed us over and just was like stealing money from us. It's so stupid.
What was the initial offer to them though? Like, hey guys, I need X amount of money to buy this park. Here's like my kind of game plan, which was probably not even what happened because your game plan was probably way off from what.
My game plan was, hey, this is a mobile home park. I know I need to fill it up.
Yeah. It's like we'll figure it out. But like, what was the initial?
We need 25 grand.
Yeah, was it like, hey, if you guys put up the money for this, like I'll give you X amount percentage of the deal, or what was kind of the initial pitch?
Yeah. Hey, we need 25 grand. It's 2 of us. We'll bring in a third. We'll give you a third of the deal. Yeah. Nothing sophisticated, nothing crazy.
Yeah. And you didn't have to do a whole, here's my syndication structure, here's my pref, and here's our waterfall on the back. It was just
easy JV.
Yeah, throw in some money, take a percentage, that's it.
Yeah, and like, so the deals I'm doing right now, they're the first syndications that I'm doing. Everything else, it's like relatively simple. Yeah. Y'all put in some money and a little bit of work, we all get, equity based on what we're doing. Yeah. Or the money we're putting in or whatever, right? But yeah.
So with that first deal, how much did you infill it, and what did you get rents to before you looked to refinance it, or have you not refinanced it yet? Okay.
Refined, yeah.
And I bet you.
Yeah. So okay.
Nice refi. Yeah. To give me that. So like, would you guys eventually kind of stabilize it too, and then how'd you refi? Was it the same lender? What'd that process look like?
So, let's see. Within the first year, maybe. 14, 15 months.
Yeah, so you bought it towards 2019? Okay.
So December 2019, I think we refied in March 21, or April 21. So we had 7 legacy homes in. Yeah. We had 2 organic move-ins, so that brought us to 19 at 36. Yeah. We bought it for $250, it appraised for $355. Yeah. When we refied, it appraised for $570. So we did it all through the same lender. It's a local bank, and man, they did us well because without him, we'd be nothing. Yeah. So got it to that. So yeah, the refi, paid. So at this point, it's 50-50 right now, right? So got the other guy out who was all stealing stupid stuff. And so it's me and Nate, and we're 50-50 owners. And so then in 22, we brought in 6 more legacy homes.
Yeah.
And so that's 25, 36 occupied.
Yeah.
And then with homes at least. And then so they're all individually deeded pieces of land.
Okay.
So I just put ads out. Who wants to buy land? I love the lease with an option.
Yeah.
$500 down, $200 a month for like 30 years, right? And I mean, it's not a crazy interest rate, but it's enough where we're making a killing, considering we paid $7,000 a pad.
Yeah.
So I'm selling it for 30 over. I mean, it's the delta. It's all the delta game, right?
Yeah.
So yeah, I mean, right now, I believe I'm at 34 or 35 or 36 with all of them, because it's still leased with an option, even the vacant land. Someone's leasing that land, and they're gonna buy it eventually. But yeah, so
when you refied it, were you able to pull out a lot of cash from it?
we didn't pull out that much cash. We stayed low LTV, not like I wanted to pull out all the cash, and the banker was like, well, like,
relax,
exactly.
You don't
and
have
I
that
was
much capital invested. We don't want to let you pull out the full.
I was a little pissy at the time, but like looking back, I mean, I'm at 4.95%, like 300,000, so like 52% LTV. So I'm cash flowing well now.
Yeah.
So
now it's like it kind of changes. You could really go head first into real estate. So
yeah.
Now at that point, so that's 2021, halfway through there. When were you really trying to transition to full time in the real estate gig, and then leading into it? Seemed like you partnered with the one guy that we mentioned over email.
Who, Groney?
Yeah,
Ryan?
Is he a partner with? No, not Ryan Gurney. There's the one guy that posted on Facebook with you or something. I don't know about signing up with your email blast.
Ryan Dumas. Vinny.
Vinny.
Yes.
But so from that first deal, did you do a few more deals that were successful until getting into now you guys are officially raising money, doing it in like a way more scalable approach, or how'd that transition look like?
Sure. So I bought my first deal. 2 years later, I got into my second deal, which is the Florence Park. And like me and Ryan Groney, paid a little bit of money for some equity. Everyone else was running it out of state, so we're in state, so we could be a little bit more hands-on. And then from that, all the partners who were on it, they bought the third park, and they had me on and gave me an extra equity because I'd be running it, which we since exited. We exited that in like 14 months. Everyone 2x their money. It's like everyone made a killing. So I mean, just little baby steps, different partners for everything.
Getting little pieces here, learning operations.
And then like last year, I just did a lot of like creative stuff, closed all the 7 parks with the same partners, and just like just doing things creative and like, okay, now I know how to do this sort of thing. So I think
now that's why you're going out raising money in a little more of a structured way. Offering like more terms that are in line with like what syndicators are doing these days. Trying to scale up to like now you have, like you mentioned, 2 under contract that are north of 100 pads each. So.
And I mean, so if I'm doing it traditional, like a syndication, it's all like 18% plus IRRs and 2x equity multiple plus in 5 years. But I mean, I'm not limited to that. So it's like that's my one offer. My other offer could be like, you carry some equity position. My third offer will be, you owner finance the whole thing. So it's like
you're willing to get a lot more creative with how you do things.
That's how I closed 7 parks last year.
And then now with the 2 that you have under contract, like what's the count? Well, first thing, how'd you source those? Are you going through brokers more so now, or do you have kind of your own deal sourcing strategies outside of brokers? Or
I'm not good like you. I don't have that. Dude.
I mean, you're getting deals done, right? That's all that counts.
So I talk to brokers and I make the offer that makes sense. So, I'm not like a lot of new people especially will be like, well, why go on market? Like, Crexy LoopNet, that's where things go to die. And I'm like, bullshit.
Yeah.
Like, you make the deal, you don't find the deal.
Yeah, so that's actually interesting you bring that up. So like a lot of buyers that I talk with now don't realize, like even myself, so seller expectations are obviously high since the interest rate change, and it's coming back to normalcy now, but like part of like what I do as a broker is I know that deals can't get done at the seller expectations, so my strategy is to get the listing, so it buys me 6 months to bring their expectations down and build trust with them.
Yeah.
And then it's like I can work the deal. Once it's been sitting on market for like 3-4 months, the seller price drop, now we can start to work something out. And it's hard to communicate that to buyers because they feel like we're on opposite teams, like buyer versus seller, right? But it's like brokers, I just want to get the deal closed.
You just want to broker the deal.
I want to get a high price for the seller, but like we know what is fair in the marketplace within reason, like within a certain range. So it's like what's a creative way we can work to it. So it's interesting you bring that up because that's like a problem I've had dealing with buyers. I'm like, we're on the same team.
Yeah.
Like I want to get this to the closing table. Like I understand I'm telling you, listen, the seller wants to see an offer at this price.
Yeah.
I'm telling you, start here. If this is what you want to pay for it, start here. Let's try and work it, bounce it back and forth, and bring the expectations down together.
Yeah.
Rather than they're like, oh no, this is a crazy price. I'm like, I know. Like, relax.
Yeah.
Right? No one lists their park to ask for less than it's worth. Obviously, we're going to ask more than it's worth, and then let's work it through. So
that was the game changer for me, right?
Yeah.
So like before last year, I was like, oh, these assholes, look at them listing for this crazy price.
Yeah.
And you've seen the offers I've sent you.
Yeah,
they're low ass offers, and not without reason. I mean, I don't give a lowball offer just for like ha ha ha. I give it like this is a reason.
Yeah.
But like my mind changed last year. It's like, okay, like instead of me versus you, it's you and me and the seller, us versus a problem of them wanting to sell to me.
It's like, can we figure out something that works for your situation and work it through? And like when I was joking, and then here's the other thing too, like when I was joking around with him before, like, oh yeah, Tim always offers low. It's like, well, Tim offers at like actual returns. The problem is you're at competition against like the deal by deal syndicators or guys who raise money a deal by deal basis. They usually are paying for reality. It's when you're going against funds because they could blend the returns of all of their deals to pay their investors, so they can afford to overpay just to acquire scale, and then blend the returns of all their deals together to get their investors their same returns. So that's where it gets tough. Like the funds can kind of overpay.
And I've learned that too. Like one thing is like not every deal's for me, and like I will offer at what works for me and works to get my investors the returns they need. And like if it doesn't, that's fine.
You're not,
like,
you're not overpaying just to get fees. Like, you really want to perform on. Unlike some of these guys
bro.
I'll be honest, on the broker side, I love the guys that are overpaying because I know that like
I would too.
I'm like, great. A 4.5 cap, yes.
Yeah, exactly. Do I make more money? Ha ha ha. Yeah. Are y'all gonna have to deal with that fallout bullshit?
Good luck 3 to 5 years down the road. Not my problem. I'll take my check right now, buddy.
Exactly. And I totally respect that. I'm always trying to be like, okay, meet someone where they're at. You know, what's like anytime someone's like, oh, can you believe these fucking sellers are trying to sell this? I'm like, bro, when I'm selling, I'm going to try and sell that shit too. Like, give me 3 caps for everything. I'll sell it to you all right now. Like, no problem. So, like, you can't get angry at that. You just accept, like, that's part of the game. And you just get in the dance or you sit the fuck down. So
over time now, and, like, this is a question I personally want to know from you, like, with experience in operations and seeing pitfalls, one with your own mistakes, and mistakes of others on deals you partner with, like, oh, we thought this was going to work out way better than we thought this info, or we thought we could raise rents to this, or just things didn't go as planned. When you are analyzing a deal, and this would be good advice for someone that's looking to passively invest with someone like you, what is like the style of underwriting that, or like a value add process you really favor? Like, are you looking for, obviously the basics, obviously below market, all lot rent, city utilities in a major metro. Okay, it doesn't take a rocket scientist to figure that out. But when you're seeing like these secondary markets, and like what are some value add strategies you take? Or if you're speaking to an investor and you're telling them, why should you invest in the deals that I buy? What is it that you are looking for as like your main driver for growing the value of that property? Is it like you're really good at the infill, or are you really good at finding unique ways you can kind of raise the rents in this particular market? What's kind of your style? And I know that's a loaded question. There's so many answers to it. But what do you usually gravitate towards when you're underwriting, evaluating a deal?
So it depends, right? Is the answer. Is also the answer for everything in nursing. So I like to get deals that will work with minimal work, like get my investors the returns with like, this is a good deal as is, but like it could be better. And I like to, I'll underwrite the possibility, but if it's like a remote possibility, then like what the fuck is the point? Like I don't want shit just for fees. Like I need to do this long term, and like I need to continue relationships long term. So I mean, if it's a big value add play, I take into account how long homes are taking to get in, how long they take to set up now, how much pricier they are now than they were before. So this is why, we talk and it's like, well, the funds or whoever are buying this, I'm like, I don't even think of who else is buying. I don't think about my competition. I think of what I have to do.
How can you turn this property around? I don't give a shit what
exactly. I don't give a shit. I know infill's a pain in the ass, and I know the way I like to do it is infill and then lease with an option, which is even more of a pain in the ass. But it makes it so I am better positioned than just like renting them out. I don't want rentals. I have an apartment. I'm not crazy about the rental thing. I like mobile home parks for a reason.
Do you, assuming the market supports it, which it seems like you're going after strong secondary markets, or if you can get in a major MSA like do you prefer like infill type parks where you could bring in new homes, or do you like if there's park-run homes in place that are vacant but not that bad? Or do you like it like, hey, I really want it not even low occupancy, but just like room for rent growth and mismanagement? Like what do you?
It could be any of those. I know that's not a good answer, but
it's tough to say because market specific, right?
Yeah. So if I'm looking at secondary, tertiary markets, so I'll do a tertiary market with a small population, but it's got to be 90% plus occupied with tenant-owned homes already. If I'm having to do infill, it very much depends. So it's all monthly, right? What's my monthly payment going to be? Or like if I'm selling them directly to tenants with using Vanderbilt or 21st or whatever Triad, like what's their payment going to be? Because I could want it to be whatever, but wanting doesn't mean shit. Like what's the reality? If a 2-bedroom rents for $800 in the market, that doesn't make sense.
$60K in a home.
So exactly. So it's always like, okay, like if I don't have to do a lot of infill, I could probably do something, in a smaller place. I was talking to someone who's like, I forget who brought this to me, but it's like 40-50% occupied. And I was like, okay, like, and they're selling for a good price. They're selling based on what it's doing now. We could make that work. But the metro's like 30,000 people, and I'm like, bro, it's going to be
it's hard to infill that.
It's hard. My first park's the town is in like 7,000 people, and it's like I did it, but it's a pain. It's a lot of hustle for that.
When you run a test ad, how many like hits do you usually look for as far as like if you're running a test ad for lot rents or a test ad for park-run home rentals? Like what's your kind of minimum threshold? Like, oh, that was a good test ad. How many like responses or inquiries?
Like 15 to 20. Okay. Nothing crazy, but pretty like standard.
You know what's crazy? So talking with different operators, right? So like Derek Vickers.
So, I was on his podcast. He's a great guy.
Great guy. So this is how drastically different Florida major markets are than everywhere else. So we were doing like the coaching thing, and there was a couple guys in like the coaching call we were doing. One of them is based in Ohio. And he was asking, when you run a test ad, like, what do you usually look for? So I was going to speak up and say, 25 hits is like, oh, yeah, it's strong demand in the first week. Derek's like, at a minimum, 150. And I'm like, oh, Derek.
I believe it.
In downtown Tampa, Florida. Yes. The homie's based in like middle of nowhere, Ohio. 150 is not happening out there. It was funny because it was like, oh, there's such a drastically different. Oh, there's Manny. What's up, dog?
There's
such a drastically different expectation of demand and stuff.
Like I would love that.
Yeah.
I'd love that. But also, like, what are you paying for your park?
Yeah,
and
that's why he has to pay crazy price per pad. And then hike rents up $300 day one because it's just a different type of market then.
Yeah, and different stuff. Right. Yes.
Greenville's kind of like that. Greenville's like.
So it's Spartanburg. So it's Spartanburg.
Okay,
it's like
but still,
like in 5 years will be the Greenville.
That whole Greenville, Spartanburg, Rock Hill, Charlotte's like
bro.
Crazy
I'm excited about that deal.
Yeah.
But so it's like same thing. Like not every deal's for me, and like with the realization of that, it takes like a little bit of the stress off of me, a little bit of the pressure. Like just make the offers that make sense to me. If they don't work, there's so many freaking deals. Yeah. Like I'll just talk to lots of people, and eventually something works. Yeah.
So now, this is a question most operators don't like to talk about.
Oh yes.
So at what part of the deal, and the way you're raising money now, at what point do you take money for yourself? Obviously, fees just keep the lights on between like DD costs, earnest money, things like that. But like at what point? Obviously, you're probably offering a pref of some sort.
Yeah.
And things like that. At what point are you able to take cash flow, or is it more back end based? Like, hey, above a certain return threshold on the back end, that's where you start to take your percentage.
I don't like doing things complicated. I like keeping it simple. So let's see, on Spartanburg, 3% acquisition fee. Yeah. That's all like all the GP, right? So I don't need everything myself. Yeah. We're all a team. We're all based on your ownership of the GP, you get that much percentage. Yeah. I think 2% asset management fee, 1 or 2% dispo fee. I think 2%. And
that's
then
reasonable too.
Yeah. And then, but like, so for that one, like I do 5% back end for like property management. Yeah. My partner, who's also like Matt, who lives up in Spartanburg, he's going to do 5% for the on-site management. So it's 10% management total. Yeah. But like we're paying ourselves, so we want to do the work. Because I worked for a while free, and
it's tough.
You can do so much, right? But so that's generally what I like to do, like 5%, 4 to 5% back end. Yeah. On the Tuscaloosa, we're doing like a 6% back end, but I'm splitting 3 and 3 with my partner who brought me the deal, and then we'll do 3 for whoever's like boots on the ground on-site manager. So I mean,
and what's like equity split like long term? Are you doing like 70-30 after 15% IRR, or what's kind of your long trajectory?
Spartanburg 65-35, cool. Tuscaloosa's 50-50, okay. And I don't look at it like that. I look at like what are returns going to be, and like what are returns reasonably going to be. Let's not push that.
Tuscaloosa's probably a big value add, so there's a lot more, strong IRR that you're looking at. So that's why you're going to 50-50 versus the other one. It's a little more stabilized, longer trajectory.
Yeah. So, but it's always solve for X, right? Solve for 2x equity multiple. Yeah. Solve for, I said 18% plus IRR, but really 20. Because I mean, come on. I mean, I don't want to be cheap.
Yeah, and then what's your transaction kind of timeline? Like, are you doing like 5-year holds, 10-year holds, or are you kind of very wide open with that? You're not too specific because depending on how our infill's looking after 3-4 years, we might refi soon, we might hold for 7-10 years.
So the plan is really for those two, especially because we're syndicating, sell in 5, but. It's when we get to that point, let's talk to all our investors and see here's what we can do. Yeah. Sure, we're the GPs and we could technically do whatever, right? Yeah. But like I like working with people.
Would you guys prefer refi, return capital, and we all have great cash flow, or do you guys want to bounce out now?
Yeah, let's make it so I want everyone to be happy. Yeah. So that's those deals. I mean, let's see, my first deal, I mean, I bought 4 years ago, and that's probably I'll just hold it. I like it. Yeah. Selling the Florence one. We're working on selling the Florence one. Yeah. The Georgia one. I mean, I used to be like, I want to hold everything forever, but now I understand the like turning money, right? Yeah. So like selling in 5 and whatnot, and just putting into bigger deals. Yeah. So like, I don't know. Yeah. It's probably going to be more like 5-year holds that like things can always change. I change my mind sometimes as the more I learn, but like that's kind of where I'm at now.
Nice. So what's a typical day in the life for Tim Woodbridge now? They have a pretty structured life, like more on the personal side. Like, are you an early riser?
I'm not an early riser, but I am a morning person.
Yeah.
Let's see. So I wake up, I exercise, I I do the big things first, right? So I do, looking at deals, putting out LOIs, talking with brokers.
What are the things that move the needles?
Yeah,
That's your first thing.
Talk with my on-site managers, my property management assistants and stuff like that, make sure our KPIs are looking good.
Yeah.
And then, okay, like, where are we at? Like, okay, I've got this under contract, I got this under contract, I got this refi.
Yeah.
Making sure that every bank and every like little thing's buttoned up.
Yeah.
Because if someone is waiting for me to do something, I like to get on that first.
Yeah.
I don't like, oh, well, I'll get to the bank in a week. It's like, no. Make them the priority, bro.
Yeah.
And then, I don't try and stress myself out too much, even though shit happens.
Yeah.
But, just take it as it comes.
Yeah.
I thought you were going to go in front of the camera. You want to be on?
Yeah.
I didn't realize the camera was there.
Yeah. The impromptu podcast set.
Hey, come on, sit.
Yeah.
Come on.
Maybe I'll learn something good stuff.
Yeah. Man.
You were asking about nursing. I think I skipped that. So me leaving nursing. So I had, I think, 2 parks and I was getting into the third.
Yeah.
I did not have replacement cash flow at all, but I had a little bit of money saved up in the bank and I was like, well, I have some real estate, so I don't really like this last job I have. How about I quit now and figure out, and worst comes to worst, I can go back to nursing.
Yeah.
And beginning of last year, I was applying for nursing jobs and stuff like that.
Yeah.
I was unsure, but then I was like, okay, how about
even to last year, you were still trying to keep the
because
job.
so I quit in end 21, September of 21.
Yeah.
All of 22, I was like, well, I need some money, and so I diverged into like single family wholesaling, lost a ton of money in that, and just on VAs, marketing, blah blah blah, and then just went through savings and whatnot, and I was like, damn, it's hard living without money coming in.
Yeah, dude, that's the hard part about buying buy side versus why I love brokerage. It's like liquidity is awesome.
Yeah,
which you do not
bro,
have
I'm
on
jealous.
buy side. Yeah, like these 2 younger guys. I'll introduce you to them later. They're really smart guys out of New York. Like, one of them works in private equity, making a lot of money, and he's about to leave that job. The other one had a bunch of money saved up from something similar private equity related in New York. He left that already because they're going all in on buy side. They just bought a deal up in Roanoke Rapids kind of area. Super cheap price per pad. Like they're gonna make a killing on that one.
Nice.
And then they're under contract with another one with me right now. But they're broke. I mean, they have a lot of money, but it's like that money needs to go towards EMD, due diligence costs, like operating kind of expenses, just like as a safety net. Like they're broke, even though a lot of people don't realize a lot of the guys that are raising money buying big deals, you included in the beginning, I'm sure it was always because you got to keep. It's in the deal. It's in the deal. That's the problem. Now that's growing so exponentially. It's like when you refi and stuff, it's chilling. But a lot of people don't realize when someone's I own 800 units that I acquired in the last 2 years, it's like that guy might still be broke.
Yeah. Oh man, I mean, I see the same. I see on Instagram, and I'm like, damn, these guys are killing it. They're like, look at that fucking Lamborghini and blah, blah, blah. And it's like the Lamborghini that they took a picture in front of in front of the dealership and shit. And I mean, there's ups and downs for sure, but the more I do it, the more it's like we live simply, I'm in a 2-bedroom townhome. Nice. It's that she owns the townhome.
Oh, nice.
And I have a 2019 Hyundai Kona.
Yeah.
I am a simple person. I just want to buy real estate and cash flow. And I mean, so I don't do anything luxurious generally. It's just not my style. But living simply has led me so I just found out, I'm buying the 2 parks. I did a refi. Yeah. Due to the appraisals, I created $970,000 in value. So we're celebrating. We're going to go do a helicopter ride to the Grand Canyon from here
gonna be a blast.
on Friday. I'm not a spend on everything.
But you're moving a little different these days.
Yes, I'm definitely moving different than I
Moving a little
was at
different
the
these
beginning
days
of
than
last year.
2-3 years ago.
Yeah.
Yeah, I
So-
mean, that's why we all get into real estate, not to move the same. We're trying to move different.
And it's, it gets a little bit easier the more net worth I have, and I look better to banks, so that gets a lot easier. And just me and my partner are signing on the loan for the Spartanburg deal, and I was like, oh shoot, I could not have done that last
now
year.
You have enough assets back to back it. You
so
don't
it's
need
just
co-signer.
it's the more you do it, the better it gets. I definitely would recommend someone not quitting until you have full replacement. But also, if I didn't do it, then I don't know if I would have done it. So.
All right, last couple questions, and we'll bounce out of here. By the way, I appreciate you sitting down.
Dude,
It's been great.
appreciate
It's been
you,
great.
man.
I like that
Yeah.
you actually share a lot of specific info too. A lot of people are vague on these podcasts, and I get why.
Yeah.
I like that you're actually giving specifics. So right now, I notice I signed up for your newsletter, by the way. Are you guys going to try and go a lot more wider with the marketing and stuff? Or, I mean, you probably have your investor base. You really don't need outside capital, but I mean, are you guys going to try and go a little more marketing focused, try and raise a little more money from kind of outside sources, or what's the goal moving forward now?
Yeah, dude. I mean, we want to raise capital from anyone who's interested in the space, Just come along for the ride. I promise you it's an interesting ride. We're talking to a lot more people. I like to have that in my tool belt, right? I like to have, we can syndicate this if they want all cash at close. Or I can do creative, or we can do whatever. But it's just another tool in my tool belt. So I don't consider anything if I can't get 2x equity multiple for investors in 5 years. Because come on. What's the point? I'm not. Come on. I'm not gonna. I'm not the type of person to try to sell a deal. I'm more here's the deal. If you're interested, let's come on. Let's do it.
Any last closing thoughts, or anything you want to talk about before we hop off the pod? How could someone? So any of your future offerings, or if they want to get in hold of you, what's the best way to get in contact?
Shoot, man. I mean, hit me up on Instagram, Facebook, Tim Woodbridge. I'm not hard to find. In whatever mobile home park Facebook groups. I mean, my email, Woodbridge, REI, real estate investments at Gmail. Simple. We're having lots of conversations with people who are interested. But I'm always down for a good conversation. So hit me up.
And one thing I could comment for the people watching. So Tim and I, coincidentally, we got into the industry right around the same time. And you've had a huge growth arc, and you never I used to joke around, Tim doesn't offer high enough to buy deals, but he gets deals done because he does not overpay like most operators out there. You are someone who actually makes sure that you're buying with baked in equity, solid returns, unlike 80% of the deals I've sold.
I don't bullshit.
Joking.
I don't bullshit. I'm very straightforward. I'm very much I want to make this work for everyone. But if it doesn't, then that's okay. Let's do the next one together. But
it's awesome to see the arc of your typical small bullshit deals to now 100+ units, major metros in the most competitive markets like Spartanburg, Greenville. That's
hot,
that's one where every fund's throwing crazy price per pad, and you're in there with a low basis. So you can't not make money with that. I don't know the specifics of the deal, but just price per pad.
Dude, I've been enthused looking at all the crazy stuff you've been doing.
I'm trying to the marketing.
building.
I'm trying to get the marketing front, and then with Nate and Josh coming on, I kind of have a plan over the next year. I think it'll ramp up pretty drastically. So
you're killing it. I love watching it. Oh. Also, thank you so much for coming into the deal room call.
Oh yeah.
Everyone spoke so highly of it.
I'm glad it was
you killed
useful.
it, bro.
Because that's not my strong suit, but I was what is something I would want to know if I was in their shoes? So I was listen, I wish someone told me, look for this, look for that. So I hope it was helpful.
Oh, very much appreciative.
All right, well, Tim, thank you,
sir.
man. It's awesome. I love it.
you.
It's a great podcast.